button. All right, guys, this is going to be the review of our course here. I can't believe we're already towards the end, but I'm going to try and keep this definitely under 45 minutes, unless we're kind of really at the end. But what we may end up doing is just splitting. What we'll probably end up doing is splitting it into two classes. I know everybody's attention span is, I think the average is like 25 minutes or 30 minutes without a break. So if I can split it up into 35-minute sessions or something, then that's probably what we're going to end up doing. But we'll see how it goes. It kind of depends. I'm going to stop after each section. Most of you, or all of you, hopefully have seen some or all of the past videos, and the idea behind this is to kind of just go back, retouch on it, make sure everybody understands, and then we move on. And by finishing all this and accomplishing that, then you will have understood, or at least said you understand, everything that I think, or all the basics that I think are required to be a successful trader. So let's just jump right into it. All right, so we'll start with what is TA? Everybody knows what TA is at this point, right? Technical analysis, trading, or charting, excuse me. Analyzing the price movement of an asset, studying the history of a chart. Charts basically tell a story. Every time I read a chart, it's like I'm reading a story almost about a certain time frame of that particular asset, and it tells me, okay, this is what's happening. This is what's going on, and each chart tells a story. And really, what I end up doing, and is having, I look for charts that kind of tell the same story, and that lets me know, hey, this is a strong trend. This is this is something that has a high probability of success, which is why we're at 90-something% accuracy, since we started trading this way. So that's all TA is. Don't overcomplicate it. What are support and support levels, resistance levels? Again, this is stuff I don't want you guys to complicate, but just get in the charts. I've said this before. Get in the charts. Have your TradingView account, or your Webull account, and draw lines. Get in there and draw lines. Support and resistance lines. It's really, it's not hard. You don't have to be perfect. You don't have to have a million lines like I do either, but get in there and draw lines, draw support lines, draw resistant lines. They're not going to be perfect. They're not all going to match up exactly. But you'll notice they don't have, they really don't have to exactly. But you'll notice, you guys that have been following me a little while, you'll see this stuff tap right at, like this one. This went right up to my resistance line and backed right off, and I'm watching this stuff play out all day, basically. But get in there, draw lines, support, resistance. Obviously, your green, you can make the lines green for support, red for resistance, and a line of support is, where there's obviously a lot of buying, a lot of buyers, whereas a lot of whereas a line of resistance, you're getting a lot of sell action there. So, okay. So that's support and resistance. Resistance is obviously the other side of the coin. It's not hard stuff. Anyone have any questions? Well, real quick. A phenomena that occurs is support will often become resistance, and vice versa. So I'm not going to go too deep into why. I did that in one of my other videos, but just know that it's a phenomena. Does anyone have any questions about support and resistance? I mean, it really is pretty simple. You have to get in the charts and draw your support and resistance. Just get in there and do it. You know, don't say, oh, I don't know how to do this, or oh, I don't know if I'm right. You can send me this stuff. I'll give you feedback, screenshot it, get in and do it. Trust me. Okay, so we all know support and resistance. What do they mean by uptrend or downtrend? Again, simple stuff, guys, right? When you're in an uptrend, you can clearly see let me see if I can zoom here. You can clearly see you know your stock is moving in a general uptrend, you know. And then the downtrend is the opposite. And again, you'll get these channels by when you get in, you start drawing your support lines, you know. So where would you draw a support line, right? You could start, you know, here's a point right here where it touches that support, right? Look, here's another line of support. So you would just draw a line right down there where it touches, you know. Resistance is the same way. Yeah, I don't know if you can really see these little yeah, you can probably see them better now. The candlesticks are touching this line that you will draw. This line isn't here on the chart, so you draw this out. But that it's as simple as that, guys. Just go ahead and draw a line that touches the top of the points best you can, and you'll see that it, you know, the stock trades in a channel, right? And if it's a big enough channel, you know, that's again, that's how I pick out some of my alerts is, and you know, lately I've even been telling you guys, here it's trading in right now, it's trading in this channel from, you know, 440 to, you know, 443 or whatever. So as long as it stays in that channel, you know, you can buy calls at 440 and sell them at 443 and buy puts. Now obviously, you know, you wouldn't necessarily, there's other stuff you look for. Remember how I said each chart tells you a story? You're putting all this stuff together to kind of tell you the story of the chart that you're looking at. So support and resistance, candlestick patterns. Are you in an uptrend? Are you in a downtrend? You know, obviously it would, buying calls would be kind of risky, right? In a downtrend, but buying puts probably not as risky. So yeah, it may be a little bit risky to buy calls here. Obviously, you don't see all this future action. You know, if you bought calls here or here, you know, you would just see this trend and say, oh, well, you know, hopefully it stays inside this channel that it's trading in. But with puts, you know, it's a little bit safer to get into puts, right? Because you're in a downtrend. So you just wait for it to go back up, and you see, hey, it's tapping off the resistance once, twice. Look, 3 times it taps off. Okay, let's enter some puts. and then you can get out at your line of support. Does it always play out that way? No, nothing's ever perfect. But these are the little things that you can do to increase your probability of success. So that's uptrends, downtrends, support, and resistance. Does anybody have any questions on any of that anything we've covered so far? Two, do you have anything you want to add?
No, not yet at the moment. I see Jenny's question here. I was gonna address that later, unless, we have time tonight, I
Okay,
can address it now. But yeah, otherwise, I'm good.
roger that. Volume. Very simply, volume is the number of transactions, buys and sells of a stock, usually for the day. So obviously it gets back to, different charts, different time period, but yeah. So if you buy a stock and then you sell it and then you buy it again, that's 3 separate transactions. That would add, 3 units to the volume, total volume. And I believe that's calculated. No, I'm not sure how often it's updated, actually. That's a question I want to answer for myself. Hang on one second, guys. Okay. Price volume relationship. So the easiest way to understand this is volume is your confirmation of a move, of a trend. So if you have high volume, if your price is going up and you have high volume, your uptrend supported by the volume. That high volume is your confirmation. Same thing, skipping down to the red arrow down here. If your price decreases and there's decent volume, then that's a sign that yes, the price is decreasing. That's your volume is your confirmation for that. But if you don't have volume, then things get a little bit iffy. So you don't really have confirmation is the best way I can describe that. So you look for healthy volume when looking at moves. If you don't have healthy volume, then almost think of it like a question mark. You know what I mean? And again, a question mark in that story that you're trying to tell with the chart. So generally, high volume is viewed as a bullish sign overall. And generally, the higher the volume is during a move, the more significant the move. The lower the volume, the less significant the move. So, and that's
Yeah.
pretty much what I just said in different words.
This one here, I'd like to add a little bit onto it. That one time I kind of did suggested that end of the day rally was because of this right here. I realized that, it was uptrending the whole day. And as it was uptrending, every green bar had more volume than when it would go down. Whenever it go down, it would barely, the volume would barely decrease. And I've seen this pattern played over and over again. Usually when it's uptrending throughout the whole day, there's usually going to be a end of the day, like kind of rally push towards more toward the end if there's a high increase in volume as it's going along.
Yeah, no, definitely. I remember that too. I was like, oh shit, how'd you know that? And yeah, no, yeah, it was, you're like, just the volume. A lot of this stuff, guys, is really basic, simple stuff. And then everybody's like, oh, how are you so accurate? How is this, how are you having so much success? And it's like literally like all just basic stuff. The secret is putting it all together. And not just looking at one thing or another thing, and then sometimes looking at one thing and sometimes looking at another thing. It's basically putting it all together and having basically these rules, and only entering the trades that that play by the rules. Now, obviously, you can get a little bit. You can. Uh, I guess the word is gamble a little bit, because that's kind of what you're doing when you say, "Oh, I'm not going to look at that rule. I'm not going to follow that rule this time." And this is when I'll alert some of the lotto plays, which unsurprisingly, yeah, most of them work out, but not nearly with the accuracy that the regular alerts do. And that's not, it's, it's not really a secret why. It's because of, having these rules, these set rules. So you're only entering the trades with the highest probability of success. So and yeah, that's really it for volume. Okay. TA short-term chart setup. So this was the course where we went through and we set up charts on or I kind of helped you set up charts on TradingView, kind of the way I have it, so you can kind of follow along. Every trader really has a different setup. You really need to, you can maybe go off mine and then tweak it a little bit, but you're probably going to end up, as you learn more, you're probably going to end up tweaking it to, what you're looking for. And I actually have 3 different chart setups. I have a day trade setup, a swing trade setup, and then I have a long-term setup, because I'm looking for different things in each one. And that starts with the moving averages, actually. So for our short-term trades, we use an exponential moving average. And what it is, you have your SMA, or your simple moving average. That's just a simple average, no formula. It's just an average price of whatever time period. So if it's a 9 EMA or a 9 SMA or 9 MA, it's just a regular average. There's no fancy formula. With the EMA, it is weighted towards more recent price action. So when would you use the EMA? Obviously, when you're looking at more recent trades. So when is that? When do you care about that? Day trading, short-term swing trading. Now, not every single trader, like I said, uses that, but it kind of, again, you're looking at different things. My long-term setup, I just use regular moving averages. I use just the typical, what is it, 13, 50, or 48, and 200 moving average. And I'll show you that, guys, setup in some of the later classes, or some of the other classes that we do. Bollinger Bands. I'm going to get into stuff here. This just kind of, where are we at time frame was? Yeah, we have a little bit of time. So I'm just going to get into this here. So we already went into volume. Everybody knows where the volume is, right? You can, a lot of times it's at the bottom here, these red and green bars. Okay. And some people have them off to the side here. I have an example. I don't really want to take the time to pull it up, but volume, like two was just saying, obviously, is something that that's important to look at.
Volume is
I'm not
one of the
going.
best indicators, in my opinion.
Yeah.
Like, you don't really need other much. That other stuff can help you, but volume is one of the it's a key. It's pretty much key.
Yep. Mm-hmm. I'm not going to read every word for word here where we went over volume. Uh, you guys have I posted this document in the chat, so you can go back and look at it and read it, and kind of go through all this as well. We did cover this in the other classes, but I don't want to again, this is just a review. So just remember, the higher the volume is during a move, the more significant the move. The lower the volume, the less significant the move. So remember, volume is your confirmation. Moving averages, we just went over. Does anyone have a question about volume or moving averages before we move ahead? And moving averages, those are, again, I have my my 9 and my 20 up here, the purple and black lines. You can make them whatever question, you know, whatever colors you want. And if you guys want to go back and look at the actual trade setup of how to set this all up on TradingView, go back and watch my video. I have pinned to the Discord channel, there's a document that has all of these courses and documents on it. So it makes it real easy. Just go to the pin, you just go to the Trading Classroom channel in Discord, go to pinned, and it's the only thing pinned on that channel, and it'll have everything you need right there for you. You can go back and it'll show you all this stuff. I'm not gonna go into it all over again. That's why I recorded the video. So, okay. Yep, EMAs. Yep, we talked about that. RSI. Okay, this is one that I kind of swear by. Relative strength index. So again, the RSI is it's a momentum indicator that tells you whether a stock is overbought or oversold. And this is it right here. You just pull it up here, relative strength index, and that'll show you the RSI. And it's a number generally between 0 and 100. It normally stays in. It can go over 100 and it can go into a negative number, but that's not very typical. 70 is this dotted line right here, and that's considered when it starts to get overbought. 30 is when it's oversold. So obviously underneath this line, you're very overbought, or excuse me, oversold. Dyslexia. And then up here, you're very overbought. And then 50 is your midway point. Obviously that's just kind of in the middle. I use RSI to help me enter and exit trades. For instance, I won't enter, if I had a bull cross, and I'll go over here in a second, but I wouldn't enter puts here, obviously, under 30 RSI. Generally, I look for an RSI of over 38 to enter puts, and generally an RSI under 62 to enter calls. And then I'll be looking to exit calls around that 70-ish RSI. So that really doesn't give a whole lot of room, if you get in at 62, but believe me, it's generally enough. So that's kind of just some of my own separate rules. And obviously it changes between the charts, what you're looking at. So for instance, this one says a 42 RSI on the 5 minute, but then you go to the 1 minute and it's a 49. So generally I like to see them, both in the ranges that I just talked about. If not, it's a no-go for my alerts. And honestly, I think that's why I've had the success I've had. So anybody have any questions on RSI? Everybody understands RSI, understand when to enter, exit, etc. Cool. Where are we at time frame? I'm probably gonna stop at the candlestick. So that's what we'll do. We'll cover MACD, Bollinger Bands, and VWAP, and we'll call it a day here. So we got RSI. Two, do you use MACD?
I do use MACD, but I find it one of my least favorite indicator. I do have it up to, just put a little adjustment in there towards my actions for the day, but I find it not as reliable as the rest of the other indicators.
Same, yeah. No, I know Aaron and Austin use MACD, and have had some good success with that. But again, it kind of it's another indicator that helps traders understand whether there's bullish or bearish movement, if the price is strengthening or weakening. Personally, I don't use MACD at all. I almost find it a little bit distracting. It kind of like takes away almost like from like what I'm doing. But it's a very well-known indicator that traders use with success. So just because I don't use it successfully doesn't mean you can't, and you don't.
Hey, are you using MACD, the regular MACD, or MACD with prices? Because I see that there's two of them up there. I use the one that says MACD with prices, so it could be different from the one that you guys are using.
Maybe I'll check that out. I think they use just regular MACD, I believe.
Gotcha. Okay.
And I believe I just used the regular MACD, when I used it or attempted to use it. To be fair, I didn't, I just didn't have a ton of success with it, and I just kind of put it to the side. So I may be missing out on something with MACD, but I want to cover it because it's something a lot of traders use. So it's similar to RSI in a way, as it helps show you whether an asset is overbought or oversold. And obviously you're looking, to enter when it's oversold, right? That's MACD. Bollinger Bands. So Bollinger Bands are a really simple way of mapping out a trend. It's a visual indicator. I'll pull them up here. Or do I have them? Yeah, we can use this one. We'll turn off super trend. Turn on Bollinger Bands. So I use Bollinger Bands more often in my longer term stuff. I use VWAP, which I'll get into more with the short term trading. They work similarly, but as you can see here with Bollinger Bands, let me turn these off for you so you can see. Turn that off and that off. So you have your center line, which is orange here. And then you have your top line and your bottom line. Obviously, the middle line is your midpoint. You have your top line, which is the top of the range, and your bottom line is the bottom of the range. And it's as simple as that, really. As you can see, when it starts to trade towards the top of the range, what happens? It generally bounces back down, comes back down, trades at the bottom of the range, trades at the bottom for a little while. As you can see, it doesn't really get too far out, and then as you can see, it just kind of does this all day long, or all period long, whatever you're looking at. And it just, trades at the bottom, trades at the top, and you kind of bounce back and forth. So it's a visual indicator. So obviously you wouldn't want to really enter calls if you're, trading at the top of the range, or you wouldn't want to enter there. You'd want to wait till it kind of cooled off a bit, as this obviously, did here in the chart. Came all the way down, and then you would look to enter there. So you'd enter somewhere around here, and look, you'd get some profits, right around there. So it's another visual indicator that you can use. VWAP. Do I have VWAP? I probably have it up, here. I don't want to show that. It's too many lines. Let's pull it up here. So VWAP, or volume weighted average price. You guys are kind of in my way here. As you can see, it kind of looks like the Bollinger Bands, right? You have your top line, you have your center line, and you have your bottom line. The difference is with VWAP is kind of with the SMAs and the EMAs, how the EMAs are for more short-term trading. VWAP is more for short-term trading as well. What it does is it basically shows you the average price, and it takes volume into consideration. So it's price and volume. So if you have traders, market makers, hedge funds, anybody buying huge, big orders, that's gonna that's going to come into play with the VWAP, whereas the Bollinger Bands, not so much. So you have your bottom here, that is undervalued, whereas the top is overvalued. So if you're buying a stock underneath here, underneath the VWAP, you're getting a good price, or what's considered, the best price. As you can see, if you bought here at the top, you're not getting the best price. You're paying more than you should. There's another good example of support and resistance lines there. That's coming from way back. I'm not even going to dig back, but so that's VWAP. And you use that again for more short-term trading. Let's see, did I miss anything with that? Current price of stock. Yeah, no, that's pretty much it. Does anyone have any questions about Bollinger Bands or VWAP? Does anyone have any questions about anything that we've covered in part one so far? Let me pull up the chat. Do I use Heiken-Ashi candles? No, I don't. I haven't really looked into them, to be honest with you.
I do use that the Heiken Ashi candles, but I use it more specifically for day trading. I don't use it for the daily or like a swing trade kind of thing. It does help out cancel the noise, and it does help you pick out like entry and exit points a little bit more clear. I haven't used it lately, but I have used it in the past, and it does work real well for me.
Okay. Thanks. I appreciate
Yeah,
that. I didn't know.
I just wanted to answer Solomon's question there.
Yeah, no, thanks. I appreciate that because I didn't have much with that. Sorry, I'm just reading through the chat real quick, guys.
To answer Jenny's question, my favorite indicators for reverse. So so this is something that you don't have posted up, and I kind of like to use it for a selling point, not more of a buying point, but I like to use CCI. So I forgot what it stands for, something with commodity index or something like that. But I like to use that as a selling point because I noticed that every time it goes past the level, see what level is it? It's at, I think it's like a 200 or something like that. Usually when it reaches the top of the CCI, I would usually find a reversal going to the downside. But for it buying it at the bottom side, expecting it to go up, I don't see much luck with that. So I find it for a good selling point.
Cool. That's good to know. I'll look into that a little more. Cool. All right. I think we got everybody's questions that they asked in the chat. Before we shut it down, does anyone have anything they want to add? Any questions? Anything at all? We're gonna do the candlesticks and all that stuff. Review next week sometime. I don't want to go too. These courses can be a little bit dry, so I don't want to go too in depth here. But if nobody's got any questions, let's call it a day, and we can pick up here in part two. I really appreciate everyone joining, taking the time on this afternoon. Keep on furthering your education with this, and I cannot stress this enough. Get in and play with the charts. Even if you're not comfortable, especially if you're not comfortable with charts, definitely get in there, play with them. So, do you use bar chart? Use put call ratios? What, like for?
I never use bar charts, and I never heard of it, so I don't know what that is. But put call ratios, I do keep that in mind. But the thing with put call ratios is more in the past of what was been going on in like the past like week or so. So I wouldn't say it's current, but like if you see a high like put call ratios like 1.5, that's generally because in the past week or so it's been going down. So they're giving you that number there. So if you're using it to buy a put, I like to say it's 1.5, it's kind of too late at the moment. It can still be going down, but you should expect a reversal pretty soon.
Gotcha. Sweet. Thanks, to appreciate your input.
Yeah, of course.
All right, guys. Get outside. It's gorgeous where we're at. So make sure you get outside, keep up the education, and we'll do part two sometime next week, maybe in the evening. So some different people can maybe catch a live course. But I thank everyone for joining too. Thanks for helping. And everyone enjoy the rest of your enjoy the rest of your weekend. Have a good day, guys.
Yeah, take it easy, guys. Have fun. Bye.